Rates fell for the fifth consecutive week on the yield curve. That's according to results of Treasury Bills Auction by the Bank of Ghana. This is expected to help reduce marginally the cost of the government's domestic debt. More in this report.
Interest rates continue to ease following an expected decline in inflation in January 2024. The rate on the 91-day bill went down by 30 basis points to 28.29%. That of the 182-day bill also took a nosedive to 30.79% from the previous weeks of 31.09%. The one-year bill also dropped to 31.39% from the preceding weeks of 31.79%. Meanwhile, demand for T-bills remained high as the government secured 4.52 billion cedis from the sale of the short-term securities. This represented about 58% oversubscription. The majority of the bids came from the 91-day bill, in which the uptake was 1.914 billion cedis. This was approximately 42.27%. The 364-day bill followed suit with a subscription of 1.402 billion cedis. All the bids were accepted. The 182-day bill also saw bids worth 1.211 billion tendered. All the bids were accepted.
Solutions is forecasting upside risks to the country's interest rate projection. That's according to its latest article dubbed "More Interest Rate Cuts on the Way in Ghana Following Cautious Start of Easing Cycle." Here's a report.
UK-based firm said an escalation in geopolitical tensions could disrupt global trade, leading to further increases in global commodity prices. As Ghana is a net importer of both fuel and food items, such an increase would raise the cost of imports and disrupt the disinflation process. It added there's also a risk that negotiations between Ghana and its commercial creditors will stall and take longer than currently anticipated. This would delay International Monetary Fund disbursements and weaken investor confidence, resulting in a sell-off of the cedi and a resurgence of inflation. In both scenarios, it said the Bank of Ghana would embark on a more conservative monetary easing cycle than currently forecast.
And I would like to bring in the head of trading at Republic Securities, Patrick Edem Agama, as he joins me via Zoom. Edem, thanks so much for joining me on the marketplace. I guess this doesn't come to you as a surprise that interest rates keep falling on the yield curve to 28.29% with an oversubscription of 59%, does it?
Well, good afternoon. It's not a surprise looking at the pricing guidance and the results. You see that the pricing guidance are working. The control measure is actually taking place. And also, if you look at the turnout, you see that the investor appetite is still rising. It means there's confidence coming back to the market. Investors are trusting the government now. So we expect this trend to continue.
I see. And this is expected to help reduce marginally the cost of government's domestic debt, right?
Yes, that's actually going to reduce it, but it depends on how sustainable this will be. There are threats to this trend. As reported by Fitch, we are seeing that if this is not controlled or this is not continued, that can actually change the trend. The policy rate is also going through that same trend. Inflation is also dropping. And if this is also not controlled well, we should expect interest rate to start rising.
In the meantime, Fitch Solutions is forecasting upside risks to the country's interest rate projection. Does that also come to you as a surprise?
Well, it's not a surprise. Investors are still watching. You know, the confidence of this market has been shaken before. So we expect investors to know that so far as we have a history of government coming in to do something that will reduce confidence in the market, we expect that can happen in the future. The history is teaching us lessons. So if we're able to follow that same trend and something happens, that can shake in actually the confidence in the market. And when that happens, we expect interest rate to rise really sharply. We are also looking at the exchange rate and see how well that can be controlled. So with all this coming in, we are hoping things will get better. But if this is not controlled well, we will get back to the same place we came from.
All right, Patrick, it's the first working day of the week. And what are we to expect in the capital market?
Well, on the capital market, we are seeing that there's still dominance in activity in MTN. We've seen some trades already happening on the market today. We expect more to happen. We are also seeing significant pressure on some stocks like Enterprise Group and Societe Generale. Whilst on the buy side, we are seeing so much interest in Unilever and GCB. We are also expecting this to happen and continue. On the money market front, we are expecting government to target 4.5 billion in the next auction. That is quite a lot, and that will be a test of investor confidence in government.